Every empire believes its currency will last forever. It's a pattern as old as civilization itself. Wealth, power, and trust, all built on something humans agree has value. From Rome's silver denarius to Britain's mighty pound, every global currency has eventually fallen. And now, for the first time in a century, people are beginning to wonder, could the United States dollar, the most powerful currency in modern history, be next? The story of the dollar is not just about money, it's about dominance, faith, and the illusion of permanence. After World War II, the world was in ruins, Europe was rebuilding, Japan was devastated, and the United States stood alone as the industrial and financial superpower. America controlled most of the world's gold, produced half of its goods, and had the most trusted economy. Out of that power came a plan to rebuild the global financial system. In 1944, in Bretton Woods, New Hampshire, delegates from 44 nations gathered to design a new economic order. They agreed that their currencies would be pegged to the US dollar and the dollar itself would be tied to gold at $35 per ounce. This meant every dollar was in theory as good as gold. For other countries, it created stability. For America, it created dominance. The dollar became the backbone of global trade, trusted, stable, and backed by something real. But that promise carried limits. In the decades that followed, the US expanded its influence and its spending. The country financed the Cold War, the Vietnam War, and ambitious domestic programs, all while maintaining that every dollar could still be converted into gold. Now, by the late 1960s, there were far more dollars in circulation than there was gold in American vaults. Foreign governments noticed. France, under President Charles de Gaulle, began demanding gold instead of paper dollars. Others followed. U.S. gold reserves started to drain rapidly, and by 1971, America faced an impossible choice. Keep redeeming gold until the system collapsed, or end the link entirely. On August 15, 1971, President Richard Nixon went on television and announced that the United States would suspend the dollar's convertibility into gold. It was described as a temporary measure, but it became permanent. Overnight, the world's most trusted currency was no longer backed by anything physical. Money became faith. The dollar was now backed only by the strength and credibility of the US government and the belief that everyone else would continue to accept it. Economists call this fiat money, currency that holds value because people trust it will. And for a while, that trust worked. The dollar remained the heart of global trade. Oil was priced in dollars. Central banks held dollars in their reserves. The United States had unmatched military power, strong institutions, and a financial system that made it easy for other countries to use the dollar. But without the discipline of gold, governments gained the ability to create more money whenever they needed to. Each crisis brought more printing, recessions, wars, and bailouts. The response was always the same: expand the money supply. Over time, inflation quietly eroded the dollar's purchasing power. A dollar from the 1970s now buys only a fraction of what it once could. Yet despite this steady decline, the dollar endured. It remained dominant because there was no real alternative. The euro emerged but never fully replaced it. The Chinese yuan was restricted by government controls. Gold was reliable but inconvenient in a digital age. Bitcoin appeared as a new kind of asset, decentralized, finite, and borderless, but its volatility kept it from becoming a true reserve currency. The dollar remained the default, not because it was perfect, but because the world still trusted it the most. That trust, however, is no longer guaranteed. Over the last decade, a growing number of countries have started questioning America's monetary power. China, Russia, India, and Brazil, the BRICS nations, have begun exploring alternatives to the dollar for trade. Russia now sells oil to China in yuan. Saudi Arabia has discussed accepting other currencies for energy. Central banks around the world have been buying gold at record levels, diversifying away from the dollar's influence. For decades, the dollar's dominance relied on the petrodollar system, the agreement that oil would be sold exclusively in US dollars. This arrangement, born in the 1970s, ensured constant global demand for the currency. But if oil begins trading more frequently in other currencies, that foundation weakens. Energy runs the modern world, and whoever controls the currency used to buy it controls global power. So what could replace the dollar? The BRICS bloc has discussed a shared trade currency backed by commodities like gold or oil. China is rapidly expanding its digital yuan, designed to operate independently of Western-controlled systems. Some see Bitcoin as a future store of value, a kind of digital gold, though its price, swings, and limited adoption by governments make that unlikely anytime soon. And traditional gold, though ancient and stable, is slow to move in a world driven by instant digital transactions. Each of these options comes with serious challenges. A BRICS currency would require unity among countries with conflicting interests. The digital yuan would need global trust in a system run by China's central bank. Bitcoin's limited scale and volatility prevent it from being practical for international trade. Gold lacks speed and flexibility. None are ready to replace the dollar, but together they signal a clear trend. The search for alternatives has begun. History shows that no currency rules forever. Rome's denarius lost value as emperors debased its silver content to fund wars. Britain's pound dominated the world for centuries but surrendered its throne after 2 world wars and enormous debt. Power creates money and money sustains power until confidence fades. If the dollar follows that path, the effects would reach everyone. A weaker dollar would make imports more expensive and push up inflation. Borrowing costs would rise, America's global influence would shrink as nations built systems that no longer rely on the dollar. For everyday Americans, that could mean higher prices, weaker savings, and slower growth. But collapse isn't inevitable. The dollar still makes up nearly 60% of global foreign exchange reserves and more than 80% of international transactions. No other currency comes close. Trust in the U.S. government, its economy, and its markets remains deeply embedded in the global financial system. Yet history's lesson is clear. Dominance always erodes, sometimes slowly, sometimes suddenly. The dollar's greatest strength is belief. People everywhere still trust it. They earn in it, save in it, and trade in it. It connects billions of transactions every day, but belief is fragile. If inflation worsens, if debt continues to rise, or if geopolitical rifts deepen, that belief could falter. Once confidence breaks, change can happen fast. Every great currency collapse once seemed impossible until it wasn't. The Roman denarius, the Spanish silver real, the British pound, each was the backbone of its era. Each eventually gave way to something new. So could the dollar die? Not today. But the world is shifting. New technologies, digital assets, and rival alliances are rewriting the story of money. The question is not whether the dollar will fall, it's what the world will look like when it does. The end of a currency is never just about economics. It's about trust, power, and human nature. And history always ends the same way. When belief fades, value follows. The dollar may survive for generations, or it may be replaced within our lifetime. But one truth remains: no empire and no currency lasts forever. What comes next will depend on what the world chooses to believe in.